Hi, I'm Evan Smith, and I'm in Stevens Energy Investment Banking Group. I'm here with Keith and Brad. We're here to talk about corporate M&A today. I might have them give a quick background before we jump into the questions.
Yeah, thanks, Evan. Keith Behrens, run the Energy Investment Banking Group at Stevens. Been at Stevens for 17 years and looking forward to the discussion today.
Thanks, Evan. Thanks, Keith. Brad Nelson, head of A&D here at Stevens. Also been at Stevens for about 17 years. Look forward to the discussion.
Great. Well, jumping right in. We've certainly had a more active year than usual across corporate M&A. We closed both a take private and a reverse merger deal, among others. So I want to see if you guys could talk through a few of those notable deals and what those might be saying about where the market is heading, or if anything stood out in particular about those ones.
Yeah, I'll hit the first one. We're involved in the merger of Juniper's Rockies portfolio companies into Pedevco, a small public company. So we represented Juniper in that transaction, and there's a lot of interesting takeaways. One being that Juniper elected to go this route because they felt like they had a bunch of upside that they probably wouldn't get value for in an outright sale process, and so they wanted to merge into a public company and kind of maintain exposure to that upside through hopefully future share price appreciation. And so out of that deal became what was created was kind of a public, company that hopefully will roll up other Rockies assets and portfolio companies. There's a large number of kind of older private equity backed companies in those two core areas, the DJ Basin, the Powder River Basin, that are kind of natural targets. And so it's going to be interesting to see how it evolves. Juniper has experience in creating similar vehicles and kind of other basins. They did this in the Eagle Ford, for instance. And so, they're trying to do it again up in the Rockies. And, so we're honored to be part of that deal, and hopefully we'll have, a future role in other transactions that kind of create more scale there.
So we were involved with Whitehawk's take private of Phoenix Minerals, which was announced, call it Q3 of this year. And it's a mineral and royalty company, Phoenix was, and roughly $200 million market cap. And when you think about the mineral and royalty space and who's public, at that point in time, you really had, call it 4 or 5, meaningful, sizable publicly traded mineral and royalty companies. So at the time, you obviously had Viper, you had Sitio at the time. You have, Kimball, Blackstone, Dorchester, and I'm sure I'm missing one or two, but just a handful of those companies. And when you think about those 5 or 6 companies, they're anywhere from, call it 2 to 3 billion on the low end. And I believe Viper today sits at around, 15 billion plus or minus in terms of enterprise value. So look, when you look at Phoenix at the time, again, call it late last year into this year, you had a company that was, around a $200 to $250 million market cap and enterprise value. And I think, we obviously didn't talk directly with their team at that point in time because we represented Whitehawk in the transaction. But I think it was a situation where that Phoenix said, look, we either really, really need to grow and make acquisitions, and do we have the capital and do we have the currency to do that? Or does it make sense to go ahead and monetize and sell to another company? And they chose the latter. So we ended up representing Whitehawk in that transaction. Again, it was just a good footprint, if you will, gassy footprint in the Haynesville and the Marcellus. If you looked at Whitehawk or look at them now, very similar footprint, heavily weighted towards natural gas. So the footprints together just made a lot of sense. But what I would say is that Phoenix, of course, ran a full sell side process. I'm sure they talked to a lot of potential buyers and bidders in that situation. And again, we represented Whitehawk, and they ended up being the ultimate winner and bidder. And again, I think it was just something where the footprint of the assets together made sense from Whitehawk's perspective as well as Phoenix. And so I think that's what drove the transaction their way.
Yeah.
Great. Well, those are two interesting ones. There's certainly been, a tremendous amount of consolidation more broadly, across the industry and upstream over the last several years. How far do you guys see that going? And how is that playing out maybe in the middle market we've obviously seen some big mega mergers, but in the small to middle market.
Yeah, I think you'll see more activity there. I mean, there's a lot of public players in mature basins, and there's a lack of inventory in some of these basins, and companies merging together to kind of create more inventory and have kind of a G&A base, two G&A bases, kind of cut down to one G&A base with the surviving company. Makes sense. Those deals are complicated. There's always social issues to work through, but I think you'll see more of that. You'll also see in some of the bigger deals that got done, there's some assets being divested as part of those deals. That's going to drive a lot of M&A volumes going forward. We were involved in the two deals we just discussed, and we have a number of public clients that are looking to consolidate or merge, assets or companies in. And I think a lot of the drivers, again, just to create scale, to build their inventory base, and so I think that should lead to more those types of deals in 2026.
Yeah, and to add to that, if you look historically, the upstream industry, I think at one point in time represented 12, 13, 14% of the S&P. At its low, whether that's COVID or around that time period, I think it represented roughly 1.5 to 2% of the S&P. And I think today it's not a big move, but I think we're 4% plus or minus of the S&P. So I think it's another phenomenon where our industry, the upstream industry, is also looking at other industries and seeing how big these bigger, successful, publicly traded companies are, and having to do the same thing. Because if you think about it, a lot of the publicly traded companies, they want to attract the attention, of course, of the energy investors, but they also need to attract the attention of the generalist investor. So if you're a $700, $800, $900 million, billion-dollar upstream company, in our opinion, it is going to be more difficult to attract attention and investor industry from the generalist investors. So I think that all goes into what is potentially driving some of this corporate M&A is that, in our opinion, you probably need to be $5 billion and above to really enjoy the benefits of being public that outweigh the costs of maintaining being public. So I think you've got a lot of companies, management teams, boards figuring out if you're in that kind of middle land, if you will. Okay, do we go ahead and monetize, or do we start buying other assets to get to that bigger level?
Makes sense. Yeah, that's played out. It seems like an IPO market, you've seen having to have a lot of scale, or you're seeing a lot less of these smaller IPOs that you maybe saw 5-10 years ago.
Yep.
So,
yep.
Kind of more broadly in the macro environment, just we've talked about commodity prices and how those might be impacting deal flow. Do you guys see that causing more corporate M&A versus straight sales, I guess maybe particularly on the oil side, or how do you see that playing out?
Yeah, look, I would say that in our opinion, as we're recording today, I do think it's a tale of two worlds between gas and oil. It wouldn't surprise us if you saw a little bit more corporate M&A that's gas weighted at this point in time. Obviously, people are seeing the current price today. The strip looks super healthy. We're seeing all the demand coming from LNG, AI, data centers, et cetera. And that looks to be like we're, still in the first, second inning of that. I think that LNG demand, I think we're around 15 Bs a day, going to around 28 to 29 Bs a day here at the end of calendar 30. That's just a lot of, demand for gas and long term. And we've obviously got to go find that gas. So I personally think there's going to be more corporate M&A for gas here initially, and then longer term may flip back to oil.
Yeah, I don't disagree with that. I think, and I do think, just absent outside of commodity prices, a big driver is just getting more scale. I mean, to Brad's point, probably, I don't know what the magic number is, but $5 billion and up maybe is a good target for kind of the minimum market cap you want to be relevant. And we cover a number of companies below that. And so, one of them, I think we haven't dug in yet, but Infinity is a company that, we're involved in their IPO. They announced a pretty large transaction today. So that's a perfect example of a company that, was a sub $1 billion market cap company just trying to get larger, add inventory, kind of spread their G&A base over a larger company. And I think you'll continue to see that. And the good thing about these deals too, kind of going back to the Juniper example, is if you can get, a company to merge in, and they may be, whether they're an oil player or a gas player, they can merge in and then get upside, kind of through whatever stock they get in a deal. That can be appealing if they don't think they're going to get full value in an outright sell at today's prices.
Yeah, and what I would also say to add to that is it wouldn't surprise me if you saw some corporate merger activity related to oil deals. If oil hangs around the hoop here at 50 to 60 for an extended period of time, you may have more boards, more companies say, hey, look, it probably does make sense to go ahead and combine. It's all about relative valuation, as you all know. So it wouldn't surprise me if there's more corporate mergers, not maybe outright sales or outright monetizations, because if you're on the sell side of that, it may not make a whole lot of sense right now.
Realize more value over time.
Correct.
Yeah. Well, great. That's perfect insight. I appreciate it, y'all. That wraps up our corporate M&A section. So thanks for the time.
Great.
Thank you,
Evan.